You're listening to Smart Metals Radio from the Hard Assets Alliance.
Hello and welcome to today's show with me, your host Andy Duncan in Singapore. Today, my special guest in Toronto in Canada is Danielle Park, who is the President and Portfolio Manager for the Venable Park Investment Council. She's also author of the financial book Juggling Dynamite. On today's show, we'll be talking about the stability of gold and silver compared to the regular stock market and the influence of cryptocurrencies on the precious metals market. Hello, Danielle.
Hello, how are you?
Now, as you know, the gold price recently fell to lows approaching $1,200, but now it's up to about $1,350. As an expert on all sorts of investment strategies, do you think gold will sustain this recent rise, hold steady, or fall back again? Or is gold just too volatile a commodity to make good predictions about?
Well, that would probably be true. It would probably be true of pretty much anything these days. There's so much sort of wild movements going on. A lot of leverage in the system tends to make things at a very rapid pace in terms of price movement, both to the upside and the downside. And that's what I see in the global financial markets at the moment. But as far as gold goes, as far as the actual bullion, we follow the GLD, the Spiders Gold Trust shares as an example or a barometer of that. And certainly 135 is the next resistance area we've been keeping an eye on. At the moment, you've sort of had sideways action within this trading range since about April of 2013. So really, until we break out of that sort of 135 range on a technical basis, we are really not able to say. It looks to me like we could be just in a consolidation pattern here. And if it does break out, then maybe it's more, belief in the volatility around the international picture with the Ukraine and that sort of thing. But sort of my base case, and it may be kind of quite contrary to many of your guests, my base case has been about gold, that we really saw the great depreciation in the US dollar happen from 2000, when it was at the peak with the tech bubble, and fell all the way down, sort of tripled bottom between 07 and 08. And that since then, we've had a breakout to the upside against the benchmark of world currencies. So part of me believes that gold already had its day, had its huge rally. The precious metals were so in vogue for a decade there. They had phenomenal returns. And since then, everyone, when it peaked at 1900, for example, on gold, people were only forecasting more of the same. I think we might actually see a breakdown from this consolidation range ultimately to the downside.
So if you think gold's going to go down then, do you think it's a good long-term investment anyway, or do you think it's a less than good investment for the long term?
Well, if it's in the commodities sector, if it's treated like a commodity, then I believe that the commodities bubble burst with the credit bubble in the peak of 07. There was a rebound rally with QE superstition into 2011, but since then we've seen a remarkable fall off in most commodity prices in the world. And I think precious metals to some extent was in that belief phase, in the, ultimately there was a belief that there would never be a downside to the world demand for many of these commodities. And I think that has certainly proven to be false. The demand in the West exploded, and that had major impact to developing countries as well. So if that's the case, then I think we may have indeed seen the peak, as I said, this cycle in the commodities precious metals cycle. The only reason I can think of that precious metals may have some legs from here would be if there continues to be a belief that, that the global currency, the benchmark currency, the US dollar, is going to be in stark demise. And if that's the case, then you may get a belief back in precious metals. I would just hesitate there, though, because that was the long-standing view. As I say, as the US dollar fell for 10 years, people really come to believe that as a perpetual condition. And I would suggest that when we look at other options in the world today, yes, the US has a lot of debt, but so do all these other countries. And there's great instability in so many places that I think that that may be why the reserve currency is going to have more strength than some people have expected.
Now, on a related note, Jim Grant of the Grant's Interest Rate Observer, he said that the Fed's quantitative easing policy, which has helped boost gold in the last few years, and its zero-rate interest rate policies, is actually going to prime a stock market crash if the Federal Reserve actually goes through with its tapering kind of actions. Now, if that happens, if there is a stock market crash because of tapering, the Federal Reserve might then reinstitute a heavy kind of money printing and quantitative easing to stop that crash happening. Do you think that that might then create another boom in the gold price?
Well, it could, but I would say that the boom in the QE belief phase was actually a superstition more than a reality. In other words, I think that even though the Fed may continue to do QE, may revisit it, because I do think global growth is coming in weaker than people had anticipated by quite a margin. And I think that we are likely in the next down phase in terms of global demand and in terms of, the fact that asset prices have become so overvalued again, right back near peak valuations. The S&P today, for example, is nearly as high as the crash of 29 in four key metrics of valuation that we follow, and only second after that to the peak in 2000. And so when I look at the valuations and expectations that are built into profit growth and momentum in here, I would say that we're very likely to have a surprise to the downside. And if that's the case, yes, it is possible that you could see a flight to safety quality with respect to bullion. The caveats there again, I go back to what we witnessed in the downturn in 2007-8 was that gold, which had been 1,000, did retrace to 750 or 700 in that range. So it really did not provide the defensive aspect that people had hoped at that point. And my concern there is that because there's so much leverage in the financial system today. Now, one of the better things is that we saw such a proliferation of ETFs and gold and precious metals products when price was going up for so long. And that's very typical of human behavior, as you may know, of course, that when price has been going up for a long time, you get more and more people selling that story and packaging products in that particular sector and theme. And we certainly saw that with spades when it came to the precious metals market. Now, since then, there's been a good deal of somewhat consolidation. In other words, there's been weak players taken out. There's been a lot of gold miners have come into trouble, as you know. So there's been some culling of the herd in the last couple of years, which would be more supportive of the sort of long-term thesis or long-term investment money that may have more durability in the belief in precious metals. And if that's the case, it could provide more security this time than it did perhaps in the 07-08 cycle. But I do think that the QE belief was not actually justified. I don't think that the Fed is going to be able to keep asset prices going up indefinitely, whether they continue, whether they increase. I think that, the gig is up. It was a confidence game, and they have tried to keep that confidence up as long as possible. But I believe that they're being shown to be, ineffective ultimately, which always happens, by the way, right? Every cycle, there's a belief that the Fed is going to step in and save and stop and, avoid the business cycle from having its way. And every single cycle, they end up losing the battle. And when you have this much leverage in the world, they usually lose the battle in a spectacular way, like not a 20% decline, but a 40 or 50% decline. So as I say, if there's a lot of levered players and there's a lot of sort of interconnected positions out there on many of the people that have been, quote, playing and manipulating and trading in all these various sectors, then you could indeed see a higher level of correlation among precious metals than people might want. There's been so much hoarding going on. I put on something on my blog this week, or actually today, about this story about how there's being manipulation in precious metals, and the banks have been backpiling and storing and front running. The banks have been manipulating basically every single thing that trades on planet Earth in the last few years, and so I have no doubt that they've been also involved in things like the precious metals market. So, but that doesn't mean that that they will, that price is at the right level where it is right now. People like to say, well, they've been, the bugs would like to say, well, they've been keeping the price down. Who's to say? Because we really haven't had price discovery in a meaningful way in many of these markets. And if that's the case, then price indeed could be quite a bit lower as well than where it currently trades. So, there's so much opaque information right now. There's so much cover up. There's so much setting aside of free market principles that it's very difficult to get a grasp on where fundamental value may ultimately fall out in any of these asset classes today. And I really don't think that, you can make an argument that precious metals is sort of the more stable of all those markets when in fact they've all been subject to the same forces.
You mentioned the gold mining sector there. Now, it's different to physical gold. The gold mining sector kind of share prices have really kind of collapsed in the last few years and gone really low. Do you think that this actually makes them a good investment at the moment?
Well, we've done a lot of work on the miners. And one of the points that I'd like to make is that the last time when they were in a consolidation phase, from 2002 to mid 2005, they spent 3.5 years really in a range bound trading sort of area before they broke out to the upside really strongly with the 06, 07, 08, belief in commodities and money printing and that whole thing. So I think that it would be maybe a little premature to say that after a year and a half of consolidation this time, they've been really trading in that band, of around 10 to around 12, around 1250 today. So that's been about a year and a half of base building. I think it's definitely a much greater value opportunity today than it was when for example, the XGD, the gold index was trading at, gold company index was trading around 26 and everybody was crazy about it and saying what a wonderful deal. And to me, it just looked like another bubble. When you see it around the $10 range, I'm getting more optimistic for sure. But I do think that it may indeed spend longer than people think in this range. Again, that would be typical of the aftermath after a bubble phase where you have that sort of back and fill and grind along, and then ultimately breaks out when the stronger players are there and when you've had a lot of the overcapacity taken out of the system. I'm just not sure that we're there yet. I think it could go on for another maybe year or two in this method. And especially, as I say, if we get another big sell-off in global markets, which I think will have some contagion effect to all these sectors.
Speaking of bubbles, we've recently seen a big bubble in the Bitcoin kind of world, especially with the collapse of the Mt. Gox exchange trading system, which I think is in Japan or was in Japan. What do you think of cryptocurrencies as investments? Do you think they're just too wildly volatile, or do you think they could be a useful kind of vehicle for people to invest in?
I hear people say they're currency, and I think to myself, if that's a currency, that's a nightmare. I mean, any kind of currency is supposed to be liquid and transactable and, readily available and hold its value on a relatively stable basis. And what you see with this, from 1230 in December to 240, just in February, and now back up to 6 something. I mean, this is not a currency at this stage. This is I would say, a highly speculative bet. Now, having said that, it's not to say that there won't necessarily be any opportunity for cryptocurrency down the road or for this type of an entry to have some merit. But I would suggest that right now, first of all, when I first heard about, Bitcoin and the idea of a virtual currency, I thought to myself, well, that makes perfect sense because we're living through a time when people have come to believe that you can literally make money out of entering digits, just fabricating numbers. I mean, we've seen that throughout corporate balance sheets, certainly through the financial sector, just making money out of thin air, just making your own rules and valuing things at whatever you like. I mean, the Federal Reserve and the central banks have been doing that as a main theme for the last several years. So it is not as surprising to me that you get something like a Bitcoin in this environment. Having said that, do I think that it's going to be around in another few years from now? I think we might, as I've said, come to the end of this belief in nonsense. And I mean that in the kindest possible way. But this idea that you can store value in things that have no actual value, that are just a belief system. And I think that we're going to probably come to, when there's less credit in the world, there's less money floating around, less waste is possible, and people get, I think, more focused on things that actually matter. And I think like food, energy, shelter, clothing, things that people actually have a consumption need for on a daily basis. When you talk about a virtual currency, I think it may go in the category of sort of superfluous niceties which we cannot afford in the post-credit bubble world. In other words, we may get back to, once they knock off the zeros and write down bad debts and take a lot of the fantastical leverage out of the system that should never be there in the first place, that'll never be paid back and that sort of thing, I think we may get less appetite for these kind of virtual pretend and extend and imagine, if you will, kind of things, and go back to the stuff that's really the nuts and bolts of the real economy and consumption.
Yes, I know in the Austrian School of Economics, there's a debate raging about whether Bitcoin has what you might call real value or not. I suppose we'll see how that pans out in the future. Now, before we finish today, Daniel, it's been great speaking to you. I always ask people one question. I usually give people $1 million, but today I'm going to give you $1 million Canadian dollars with the Queen's head on. What would be your percentage of investments of that in gold and silver? And how would you spread the rest of that $1 million around at the current time just for yourself?
Well, it would depend on where the person lives, to be honest, because my own rule set is that if a person lives and pays their bills in Canada, for example, then they should have the bulk of their money and savings in Canada, and perhaps a 25 to 30% maximum exposure to an international currency. So if you're based out of Canada or if you're based out of the US, I would say the same about the US. You should have the bulk of your assets in US denominated dollars. So perhaps, a 30% exposure to a foreign currency. At this stage, though, I would say that unless and until gold breaks through that 1350 with some conviction and volume, I wouldn't be adding to gold or silver here. I would have some, if we were Canadian based, I would have 25% of the money US dollars. And I would just sort of keep extremely liquid. I wouldn't be putting it into anything that is highly levered or needing sellers to take it off my hands at this point, and really just wait this out. I actually think we're going to get a market clearing event here within the not too foreseeable future, which will be one of the best investment opportunities of my lifetime. So I'm very excited about that. But first of all, we have to get through the shenanigans that are going on right now, which have to do, again, with extend and pretend and cover up. Once we get some actual revelation of value, I think prices will come down significantly, and that is the time you want to have that cash available to really go on a buying spree across the board.
Okay, it's been fantastic talking to you today, Danielle. What's the best way for our listeners to find out more about your financial services?
Well, my blog is jugglingdynamite.com, and I write on that daily and weekly, and I can be found through there. I'm all over the internet, and it's quite easy to locate me.
Okay, thank you very much for your time today, Danielle Park.
Thank you.
Don't forget to visit us online at www.hardassets.alliance.com/radio, where you can subscribe to our free mailing list. You'll receive our podcasts in real time, along with our free Smart Metals newsletter, and you can also subscribe to us on iTunes. Anyone who wants to set up an account with the Hard Assets Alliance, as a special offer, opening and setup fees will be waived. Just visit our website online to get in on this special offer. Listeners who'd like to speak to a live rep to walk through the registration process can call 1-877-727-7387. That's 1-877-727-7387. I'd like to thank Danielle Park for joining us on today's show, and I'd like to thank you for listening. Until next time, goodbye.